Hello, everybody. My name is Phil Blancato, and I'm CEO and President of Ladenburg Asset Management, Chief Market Strategist for Rose. Welcome to another weekly Market Impact. Well, here we are, November 17th. Wow, time is flying. I don't know about you all, but certainly Thanksgiving being right around the corner is a fun time. So we all have that to look forward to. We had snow over the weekend in New Jersey. That's a new one. It snowed, and I think we had some flurries last night. So I'm very excited that winter is here. I see some of my favorite ski mountains are getting covered with snow. So I know it's getting chilly. Last night, this morning, I went to put the garbage can out, and the top of the garbage can was frozen. The water on top of it had some water on top, and that froze. So we are below freezing, and off we go into winter. I like the winter. I saw a wonderful shot of the Rockefeller Christmas tree being built, the scaffolding all around it. So that's really fun. But I think Thanksgiving, well, Halloween's the coolest holiday of the year. Thanksgiving is, I'm sorry, Halloween is the coolest, the most fun. But Thanksgiving is the one that I think we can all rally around. It's a real American holiday. So I think Thanksgiving is great fun. So I'm looking forward to it. I make the turkey. I talked about that last week. I was just telling somebody how I brine it for over 30 hours and I slow cook it on the grill. And I do a lot of Italian seasonings and dressings, so it comes out with a lot of flavor, a lot rosemary being my key, rosemary, and then particular kind of butter I use with garlic in it. Good stuff. Over the weekend, I got a chance to go down to see Georgia. Now, I know you all are sick of this already, but I went to the University of Georgia because it was my daughter's birthday, Luca. My older daughter's 22. She's feeling 22. She's a Taylor Swift fan. So her cake was this big heart. And it said feeling 22 on it, Luca version. It was kind of fun. So for those who are not Swifties, I'm a little bit of a Swiftie. I went to her conference. I enjoyed it. Her concert was a lot of fun. Anyway, we had a great time down there. And of course, the Bulldogs won again. They beat Texas soundly. It was a little close there for a little bit. But, Texas kind of fell apart in the fourth quarter. And we had a ridiculous drive where we went for it twice on fourth down and an onside kick. If you didn't watch the game, it was a really good game. A lot of fun. So we'll see what happens next for those Bulldogs. But it was a great time being down there with my daughter. And actually, my sister came down, which was quite fun. She's been bugging me to come down. So my sister came down as well with my niece and my nephew, Mark and Michelle. And my wife, Marie, came down as well as my niece's boyfriend, who I love him, Ben. He's a good guy. Hopefully, when he says they get around to getting married, they don't seem to ever want to do that. I don't know why they're living together. There's nonsense of living together, but they're living together and hope they get married. Anyway, great time down in Georgia. 70 degrees, warm, beautiful. I got home to a little chilly weather, but it's a fun time of the year. It really is that, everyone's getting excited about the things to come. And so are markets. We have a scenario where markets right now clearly are at a bit of a inflection point, this sort of ebb and flow that's happening on a regular basis. And if you ask yourself why, well, certainly you can't help but look past the AI trade. There is no doubt about it that the AI trade and what's happening with artificial intelligence is profound. And I know there's been a lot of comparisons drawn to what happened during the tech bubble way back when in 2000. But just to give you an idea, last week, for all the volatility of last week, the market ended up higher for the week. We're up 0.12 on the week. Now, it's not a lot, basically flat. The Dow, for all the highs and lows, up just about half of 1%. Now, small caps had a rough run. And in risk-off markets, small caps were down 1.79. And a bit of a disappointment this year, only up 8.32. So it's about 50% behind the S&P, a little less. But that's because in a risk-off moment where we're worried about valuations, small caps are feeling the brunt of it. And there's concerns about the U.S. economy and how strong the U.S. consumer is. When you look at the spread last week, value stocks did better than growth, marginally, very close. And I think when you look at that reason why, it's, again, risk-off moments. You're going to buy dividend payers rather than the high flyers. The bond market even had a tough time because it was down about a quarter of 1%. What happens with the bond market is it's a flight to quality usually, and bond prices go up, not down. But in this scenario, yields went a little bit higher. So I worry about the bond market as well, which was, again, a risk-off kind of moment, which usually helps the bond market. I was surprised to see the bond market do so poorly. Well, down a quarter, 1%, not a big deal. The reality is the shutdown ending was enough to get folks excited, but not enough to push markets higher. And the shutdown's probably going to cost GDP, growth of the country, about $15 billion, something like that. And beyond that, what does it mean for the prolonged basis? It means probably for the fourth quarter, we're a little bit softer than normal. are we might be flat to negative on GDP growth for the fourth quarter. But all that spending that hasn't happened for folks who are furloughed or didn't get a check, or some of the unknowns around airlines and so on, I think a lot of that gets pushed into the first quarter. But the consumer is critical right now. The consumer is always critical. When is the consumer not critical? That's a silly thing for me to say the way I put it. But the reality is, a strong consumer is critical. So today, I'm happy to bring on one of the guys I get to work with every day, Ben Dennis. Ben, join me, buddy. Where's he at? He's coming on. There he
Hey
is.
Phil.
Bearded Ben. Oh, look at that. He's got a good beard. I couldn't grow a beard like that if my life depended on it. For an Italian guy, I'm not that hairy. That's a good. He's a redhead too, which you don't see that every day. Well, I guess they call you a redhead, but he's got good beard work and he does it well. Hockey player, bearded, and recently married. So I love his wife. She's the rock star. He's a nice guy, but his wife's much better. Um, Ben did some work on us on the where we're at with tariffs, and I also want to talk a little bit about because he did some work on the consumer. So we just, we do our white papers, and the white papers are basically kind of these hot topics for a month. And tariffs are a never-ending story. To pick one month to talk about tariffs is relatively impossible. I mean, heck, since Ben penned the paper, Swedish tariffs have been negotiated back to 15%. I saw over the weekend, and Italian pasta went to 107%, which has me a little upset because Italian pasta is much better for you. Take my advice, everybody. Do not buy American pasta. I'm not being pro-Italian here. Just look at the ingredients on American pasta versus the ingredients in Italian pasta. One has three: water, flour, and egg, and the other one has like 15. That's all you need to know. But Ben, why don't you talk a little bit about what you found in doing the latest on tariffs and what the impact is so far?
Yeah, thanks, Phil. So, where we stand today is kind of like, how we approach this paper, or effectively how tariffs have evolved over the course of the year. And it's been a wild ride to say the least. But to put this into like a simple way to frame it, it can be kind of broadly defined into four phases is how I kind of laid it out in the white paper. Initial strikes, which occurred, I know everyone thinks about Liberation Day in early April as the big start of this thing, but really initial strikes on some of our closest and largest trading partners began in February and March. Then that second phase is Liberation Day and the dramatic escalation that we had with China, where we saw, reciprocal tariffs reach up to 145% at one point, really scared markets, and that's when we had a real bout of volatility, and markets declined significantly in early April, but recovered fairly well through the summer when negotiations and selective relief were kind of squared away with a number of partners. We saw delays for China. We saw tariffs ease on the EU. And then finally, this latest phase, sector-specific expansions and deal making, when we've seen, further deals get tied up. I'm thinking specifically about South Korea, Japan, and then, a further delay slash agreement with China that's kind of been at least managed for the time being. But
What do you
we had,
think? Let me jump in for a second. You just
yeah,
on
yeah.
China. We've gone back and forth and back and forth, the lithium issue, the non-lithium issue. And then over the weekend, the president came out and said, consumers are still upset about the prices, so maybe trying to import goods that are cheaper. Why is there this never-ending back and forth? Is it because it really is one big negotiating issue, and or is it they're just, in your opinion, after writing this, why can't we get to a finalization? Why is it never ending?
I mean, I think a big piece you mentioned AI at the top of this podcast here, but it's a lot of it is competing for AI dominance. A lot of it is yeah, I think that the whole thing is the whole trade agreement, all of the deals on different, products and stuff is on the table with Trump at any given time. And it seems like China has kind of gotten to a point where they feel confident enough to throw their weight around a little bit, and it's a tough negotiating situation. They're both trying to establish dominance, like I said, in AI, but other industries have been pulled in, like soybeans was a big point of contention that we fortunately got worked out to the advantage of American farmers in general. But it's broader while also focused on the big key piece of dominance in AI. You know.
What do you think for the folks that listen to this podcast? And I know when we saw the last election cycle, people are still upset about cost, and to some degree, that's falling on the president's feet. Does any of this mean that people are going to pay more in prices? Is there a front loading of inventory that's going to get more expensive next year, or maybe this past weekend with lowering prices on coffee, bananas, and beef? Is that going to make a profound impact? What do you think?
I mean, those are positive steps. One area of concern that I have here is that, by and large, domestic importers or the American side of companies who are selling these goods, they seem to be at least upfront eating a fair amount of these price increases as a result of tariffs, being unwilling to pass those price increases on to the ultimate consumer. That's been partly because we've gone back and forth so many different times on tariffs, on what numbers are slated for what countries and what goods and things like that. But as we get more clarity, they might feel more comfortable raising prices down the road, once they've figured out, how this will ultimately affect the bottom line, the expenses of their business, what it'll do for hiring for them, and that kind of thing. So, I mean, there's an outside chance that we might see some further price increases, but by and large, I think to this point, we've seen tariffs generally be, not as significant as initially thought. The prices that consumers ultimately realize haven't been dramatically higher, but at the same time, we've seen CPI tick up marginally. We're above 3% again, so there is concerns about potential further price increases.
What do you think the average person is going to pay more right now? We've talked a little bit on this podcast between 600 and 1,000. You think that number's still right? What do you think it's going to, where are they going to, what's it going to cost each person if you had to guess?
Yeah, that seems to be right about where I've seen, like, on average for annual expenses. But it's hard to say with these the idea that there might be price increases that we haven't yet seen, that companies are eating on behalf of their consumers effectively to not lose market share,
So that's the problem. I mean, there's been some front loading of inventory that things might get more expensive next year. And right in this, was there anything that surprised you? You know, maybe the biggest trading partners like Canada and Mexico, where they stand. What surprised you about writing this?
Um, yeah, I'd say that, it the back and forth that we've had with those key partners in Canada and Mexico, has been more volatile than I thought. I mean, granted, you have to realize that the vast majority, upwards of 80 something, 85% of goods are covered under the USMCA and not seeing price increases as a result of tariffs. But on the rest of the goods, that smaller percentage, it's been, contentious to say the least. I mean, and I'd even highlight, you know, just the week before we published this paper, Trump basically discontinued all trade negotiations with Canada over a television ad. So we're still kind of dealing with this tit for tat a little bit. It seems like we've had otherwise productive discussions. Even Prime Minister Mark Carney came out and emphasized their willingness to resume discussions that had been constructive to that point. But, when just a television ad, which was, yes, run by the Ontario government, but when that can discontinue all trade negotiations with a critical partner like that, that's it's a little bit frustrating and hard to reconcile.
Yeah, it seems a little bit unusual. So, what do you think this means for consumer spending? I know you spent some time on spending and where the consumer's at right now. How's the consumer doing right now?
Great, to be honest. The consumer has been driving the vast majority of economic activity throughout the year. We generally understand in financial markets that consumption makes up about 70% plus of GDP. And I think that this year we've seen at least that the consumer's kind of been the linchpin holding the economy together. And our expectations for the holiday season, I know everyone likes to talk about, the potential for a Santa Claus rally. There are other market forces, that might be working around how markets actually react, but consumers are intent on spending. And it's funny because this kind of contradicts what consumers say, or how they describe how they feel about the economy, the sentiment essentially, but their actual spending numbers remain quite strong. And we're looking at, collectively consumers spending over $1 trillion for the first time through this holiday season,
Did you get that,
which
everybody? $1 trillion. Hope everyone got that. How much did we spend on back to school? What was that number, Ben?
just south of 40 billion.
And it was better than expected, right?
Better than expected, better than last year, as was Halloween.
What was
Uh,
Halloween?
Halloween, not quite as large as the back to school spending season, but we're looking at 12 to 13-ish for this year, and that's looks like at least 1 billion more than last year.
And then
So,
finally, not the last couple months would be 975, or is it 975 total?
um, no, no, the 976 was last year's total
Okay.
for holiday spending. This year, we're looking at 1.01 to 1.02 expectation coming from the National Retail Federation.
Think about that, everybody. $1 trillion being spent on a holiday season. So far, to Ben's point, tariffs are still here, costing the average person, we think, between $600 and $1,000 more over a poor period of 12 months. By gasoline, still some of the lowest prices you've paid in a long, long time. There's an electricity issue in the United States. We know, depending on where you live, could be up as much as 18% year over year. Some analysis done by the folks over at Apollo suggesting that those prices are really quite high, and surprisingly how high. And I don't know there's an easy answer for that, because AI demand for power is causing that, and much less about the price of oil or gas. But I guess, Ben, what conclusion would you want to leave with everybody about the health of the consumer and tariffs? How worried should they be all about this?
I don't think that we need to be overly worried about tariffs. And for one, I think the health of the consumer is about as good as it's been in a long, long time. I mean, we're talking about we need to go back to pandemic era time, but that's when American consumers really took the opportunity to pay down significant debt, and your average balance sheet for Americans is quite strong. You know, the value of their homes, if they own financial assets like stocks or bonds, all of these things have increased dramatically in value, particularly in recent years. But in conjunction with that, they've paid down debt and done it, taken care of expenses. So we still are well employed. You know, full employment. I think our unemployment rate right now is a 4.3. So an employed consumer who's willing to spend, despite saying that sentiment isn't quite as strong as their actions might be. I think we're in a relatively good place, and we still have a number of Fed. I know the Fed is a little bit more split on whether we're going to get this December cut or not, but a number of Fed officials have been out there for months saying that tariffs are a one-time price increase. It's not a source of ongoing inflation. And even if we do get a little bit of a bump next year as a result of some further pass through to consumers, it's still just a one-time event, right?
And that's the critical thing, everybody, that if it's a one-time event, it means inflation's moderating, means the Fed over the course of the next 12 months does some cutting. We think that's a possibility down the road here. Probably not at 4% where we are today, but end up next year at this time, maybe 3.5, maybe 3.25. I mean, some good things would have to happen, lower inflation. We wouldn't want the Fed to be cutting because of a weaker labor market. That would be really bad for equities. But I think when folks look at where we are today, earnings for the fourth quarter have been, or third quarter, excuse me, have been quite good so far. AI is dominating the conversation, but the consumer, per Ben, I think it's pretty good shape. We're spending enough to hang in there and actually doing quite well. Any final thought before I let you go, Ben?
No, I mean, I just kind of echo your sentiment that everyone enjoy the holiday season, upcoming Thanksgiving holiday and everything. But markets, we might be in a bit of a tenuous place right now, and fourth quarter is historically the strongest of the year. So just kind of keep that in the back of your mind. Consumer is still healthy, unemployment's still low. We're in a relatively good place. I don't see, recession in the cards personally. So yeah, happy holidays, everyone.
And I'd say you're going to make a great Santa Claus someday. And when you have that, you're very old and gray, you're going to be a great Santa Claus. Well,
Thanks, Phil.
Ben's one of the critical members of our team, CFA, really wonderful, relatively very smart guy. And I guess I would echo one last thing with Ben, or ask him one last question. Who's going to win the Stanley Cup this year? Ben's our resident hockey guy, by the way.
Oh
You can
man.
say the New Jersey Devils. I'm fine with that. Probably.
Uh, I'm a big Ducks fan. Our team has taken a lot of like unexpectedly huge positive strides, but I don't think we're quite there yet. The West is very strong. I'm kind of thinking the Avalanche have a real significant chance to win again. So.
Oh boy. Okay. All right. Not a New York team again. Anyway, thank you for joining us today, Ben. Happy holidays
Yep.
to you, buddy, and wonderful
Thanks,
job.
Phil.
All right, Ben's piece is available to you at LTM.com as well as our chart of the month, which shows consumer spending. He did both of those, and they're really excellent work. So if you want to learn some more about this stuff, reach out to your financial advisor or to us directly at LTAM.com, and we'll gladly provide you that information. Thank you, Ben.
Thanks, Phil.
Some final thoughts for me. There's a lot of talk about the AI boom out there, and I get it. I totally understand why there's worry about it. We saw some data come out last week about consumer sentiment as well as small business optimism, the NFIB optimism, and all not looking great. Small business optimism looked at where we at. The reading fell to 98.2 from 98.8, which is still far below one of the lowest meetings one of the lowest readings of the last 6 months. And sentiment, because of the government shutdown, was also some of the lowest levels of consumer sentiment we've seen in a long time, in decades. So you have this scenario where I talked a little about the market already, where there's a lot of concern out there. But this week we're gonna a couple things interesting will happen. One, the FAA will turn back on flights, so the Thanksgiving issue should be gone, and potentially TSA employees who come back to work will get a nice bonus. So hopefully they'll be excited to be able to maybe perhaps get into their office and help make Thanksgiving travel be okay. We're going to get data this week. The federal government's going to print the September non-farm payroll data. And that's very, very helpful because we'll get a good idea of what's happening in the payroll market. Where are the jobs at? Are they being added? Is there something we need to think about when it comes to jobs? So we'll get that information. It's really important to see where we're at from the health of the U.S. economy. We're going to get other inflationary metrics coming out this week as well. So I think that's also quite important. And then we're also going to get data from NVIDIA, whatever the hell it's called. Excuse me, whatever the heck it's called. And I think that's going to also be helpful. And why is that going to be helpful? Because as NVIDIA goes, the market goes. Today, it's 8% of the total market cap of the S&P 500. It's the biggest company in the world at $5 trillion. It matters from the AI spending an issue. And I think people care a whole heck of a lot about what NVIDIA does because they probably own a lot of it themselves personally and have made a lot of money over the short term. So let's talk about this issue for a moment. NVIDIA being such a big company is critical that when you think about where we are from this AI boom, they are the tip of the spear. And there's no doubt that as the market goes, they go, or they go, the market goes. And as NVIDIA goes, it goes. And this isn't the first time we've had this sort of seminal moment of very highly concentrated stocks in the S&P 500. Remember, it happened early on. Back in the 90s, we had something called the Nifty 50. That was another boom that we had where we had 50 stocks dominating the S&P 500. So this isn't new that we've seen these sort of concentrated markets and what's happening out there and what's the cause of them. Meaning they tend to be things that are changing the economy, changing the marketplace, driving the market because it's where the revenue is being made, where the future is, where the puck is going. Use my cheesy analogy that I use far too much. So whether it's, we've seen this pattern before with the Nifty 50, or you think about history as a guideline, what it means, tech-driven sell-offs of the 2000s, it's not surprising to me that there's concern. Now, even though NVIDIA makes incredible revenue, they're going to have probably put up bottom line revenue of around 30%, which is quite incredible. Their effective PE ratio, price divided by earnings, is probably going to be somewhere around 40. But they make a lot of money and they matter globally and domestically. And guess what? It's an American company, so it's really very important. I would say I have some concerns about the other things besides NVIDIA. I'm worried about, are we overbuilding in data centers? Are we going to take too much power? Who's making the plastics that the actual chip software goes onto? Who's making the products? Is that over being built? There's certainly billions of dollars being spent. Meta alone is building a project in Louisiana called the Hyperion Project. It's a massive data center. There are data centers being built, one of the biggest in the world. Texas and Wisconsin, both gigantic data centers for open AI. And I think it create this emotion of what happened in the past, and that's why you hear all these things about bubbles and what it can mean. But technology is critical, and the AI boom, who's going to win that race, I think matters. We are certainly going to win it, we may have people competing with us for the winning of it. So we'll share the winnings. I think winning is a goofy term. I think it's more like what companies are going to use it to become more effective and more productive. And we're already seeing that. Heck, we're using it at work to be more effective and more productive already. So I guess kind of the bottom line is that, yeah, there's some things that are bubblish, like the number of data centers being built, the cost of energy. Watch when you have folks revolting against AI because they don't like paying 25% more for their electrical bill, which is happening right now. We just had an election in New Jersey. One of the reasons why Mikey Sherrill won, I think, because she's demanding that we get lower energy prices. By the way, I don't think she can do it. It's we don't make electricity in New Jersey, so you can demand all you want. The power company's going to make what they make. So it's just kind of crazy that we have this scenario of all these things happening in AI, which I think it's kind of like a this scenario where we're going to spend a bunch of money, have a lull in how much we use it, so it doesn't produce enough revenue, and then it produces a bunch more revenue down the road, which is probably 5 to 8 years from now. But in between there, you're going to have this scenario where we overspent on AI, and I think there'll be some busting because of it, which is why the market acted so volatile last week. If I summed it all up, that's the problem. That it was volatile last week simply because of prices of companies divided by how much they earn are expensive. A couple of companies are still exceptional, like NVIDIA, but ultimately we have a scenario where the market's got to catch up to prices. What should you do? You should take some profits, sell some of your NVIDIA, sell some of your Microsoft, pivot to the bond market, which is having a wonderful year. Pivot to maybe international stocks, which have a chance to finally start to grow again. Pivot to mid cap or small cap stocks, which have much better price to earnings ratios because they matter. And don't be so sort of blasé and that you're not worried about taxes. For God's sakes, pay some taxes. It's not going to kill you because if you made money, you're paying taxes. That's a good thing. So I guess I can't stress enough at moments like this when there's concerns about AI and bubbles that we don't fall asleep at the wheel. We don't take eye off the prize. You've made a lot of money. There are areas of this boom that I think are going to be susceptible to real corrections. Who puts the software on the chip? What data center is working? Which one's not? What if we get corrupt data? ChatGPT was thrilled over the weekend that they were able to add hyphens and commas in better places because they've had some grammar issues. What? We're still that far behind? I mean, come on. There's a long way to go here. So if you're not taking some profits, I think you should. I'm not saying it's a bubble. I just think there's areas that have become bubblicious, like the chewing gum. So I'm ranting here. It's enough of my ranting. I don't want enough of my ranting, but it's time for my shout out of the week. Well, that's an easy one. My shout out of the week goes to my daughter, Luca Gianna Blancato, 22 years old. She's the nutty professor. I love her. She's a wonderful young lady, and a good kid. She's got a really good heart. She, loves to be loved out there with her friends. She's a very bright young lady. I think she's got a photographic memory because I'm pretty sure she studies the night before every exam and somehow still gets really good grades. But she's also landed a job next year coming out of college. She's already got a job, so she'll graduate next May. She's becoming an adult. I'm watching her become an adult in front of my eyes. My God, time flies. My wife put up some pictures of her this weekend when she was a baby, and that seems like yesterday. And time really does go by so quickly. And my best advice is take advantage of when you have the opportunity to enjoy life as much as possible. I had a great time this weekend down in Georgia, celebrating a wonderful young lady's birthday. I'm proud of her because of the young person she's become, but more because she's really got a good heart. She wants the right things for people. She wants the right things for the world. She wants the right things for her family. She wants to see everyone do well. And I think she's passionate about life. Hasn't figured it all out yet. She's got some things to work out yet. But when she does, I think she's just going to crush it. I really do believe that. Hopefully she wants to get married and have a family someday. So hopefully I can find out, not me, hopefully she finds a nice guy someday because I know that's on the list and hasn't figured that one out yet. But besides that stuff, she's a really talented young lady. So forgive me for making it personal this week. I do that once in a while. You get shout outs everywhere. I thought mine I'd make it about someone who I love and admire and certainly am very, very proud of. With that, everybody have a wonderful week, and I'll talk to you all real soon. Thank you very much. Take care. Bye-bye.